Good morning, everyone, and welcome to another edition of Money Matters here on Win FM. It comes to you every Wednesday morning at 10:15 to 10:45, and this is where we take the opportunity to speak with consultant and financial coach, Mr. Tally Francis. And we have him here in studio today. Good morning, Mr. Francis.
Good morning, Sharon. Nice to be here.
As usual, nice to have you back as well. And today, let me just say, though, that Financial Matters is brought to you by 1FM. If you would like to actually sponsor the program, we are very open to that. So if you're a business place and you're listening to this program and you would like to get on board with us, that's fine. You can contact either me or myself and Mr. Francis and express that, and we will be sure to help you out. Yeah, I guess I could say that, right? Help you out.
You can, and of course, this program is a public awareness program, so
yes,
it will be collaborating and working towards assisting us in helping our people to be very aware and informed of the steps and the tips and the things that they can do and not do in order to have financial wellness.
Yes, indeed. All right, so let's jump right into things. Today we're going to be talking about how to save money on vehicle loans. And I'm pretty sure a lot of persons' ears just perked up a little bit because, to move around on your own and not have to depend on public transport, that's something that a lot of people are looking into and wondering if they can afford. And I'm pretty sure right now you have their full attention. Even for those persons who already have a vehicle, they're probably listening out as well. So let's dive right into it, shall we?
Yes.
Okay, so, right off the bat, a car is a very, very big expense. And even the cheapest ones can be a lot or too much for a normal budget. The question is, how can someone save on a vehicle loan?
Right. So to start with, I think we can just from the beginning say the choice of vehicle will be extremely important. The lower the cost of the vehicle, the lower the price of the vehicle that you line up to purchase, is the less money you will need to be spending for it and the less amount of money you would have to borrow in order to pay for it. Now, this is very simple, and someone might say, well, duh.
Indeed.
But, many persons forget this fact, and when you're choosing a vehicle, they look mostly for the luxury or the excess comfort and facilities and so on. But when you're buying your vehicle, financing it with a loan, this is extremely important so that you do not hang your hat where your hand can't reach, so that you do not put the hat where your hand will suffer and stretch a lot over the coming years in order to pay for it.
All right, so by choosing an affordable car, you'll be able to borrow less money to buy it. It's kind of obvious.
Yes, it is. But of course, in addition to having to borrow less money, it means you are benefiting from paying a low amount every month. But in addition to that, if you choose an affordable car, it means that, generally speaking, the vehicle expenses would be much less as you go down the period. So especially for persons who, have a low income or a modest income, who will need a vehicle, not necessarily for business, it's extremely important that you pay attention to buying an affordable vehicle. And I don't mean a cheap, beat-up thing, at least something that's affordable and reliable at the same time. But you pay attention to it to doing something that is going to be something you can afford as you go down the line. And this would be the first very important tip when you're buying a vehicle on how to save, because by how you stretch your hand, by what price you pay for a vehicle and what loan you take, you are able to reduce the amount of cash that goes out of your income, out of your pocket, down the line.
Okay. Affordable is definitely the key word, because it doesn't make sense to actually take something that you can't afford in the first place. But how can a person know what car price or what vehicle loan amount is affordable?
Right. So, and again, and that is the question, how to save on vehicle loans really start from having the first tip taken care of, which is that you have an affordable one. But how do you determine what is affordable? Now, what's affordable for one person will not be affordable for another person.
Definitely.
So how do you do that? Now, in this case, you remember we spoke about a rule for setting up your budget right. Mm-hmm. So regardless of what your income is, you could use that measure as we suggested, the 50-30-20 rule as an example. So there is a rule or a procedure, an approach just like that. Similar to it in car purchasing when you're using loans, that we call it the 24-10 rule. And if you take that approach, there is no way you will end up with a car loan that is not affordable.
All right, so if I remember correctly, the 50-30-20 rule, when you're setting up a good budget, you said that 50 went to needs,
Yes.
like bills and food, because you have to eat. Let's see, 30 was for your wants, and 20 should go towards savings and debts, right?
Paying down debt faster and so on. Yes, correct. That's very, very good summary.
All right, and if for some reason, if you didn't actually hear that particular episode, you could always head back over to our Win Media SKN YouTube page and Facebook page and look at that episode. If you're tuning in for the first time and you're wondering what are they talking about, you can check it out right there. Okay, so back on topic, you mentioned.
Yes, the 24-10 approach, which I will try. Let's speak about that one, because
Okay.
that is a way in which you can get to affordability as far as your car purchase is concerned. Now, these are numbers, 24 and 10. So let me take a moment and walk through them.
Okay.
When we say the 24-10 rule, we go through each number on its own. So 20 means when you're going to purchase a car and you're going to use a loan to purchase it, try to ensure that you have a down payment that is at least 20% of the price of the car. That helps you to determine that it's affordable or not. If you have not saved up what is equal to 20% or more of the price of the car, then that means you're trying to get a car that you can't really afford. No, not 20% of the loan you're going to get, not 20% of anything else. What is the price of the car? Do you have 20% of that in order to help you become the owner of the car? If you do, then you are more than likely buying a car that is affordable. Now, if you find that you don't have 20%, then maybe you need to save up a little bit more and delay the purchase of that particular car at that price. Or alternatively, you could continue shopping for a lower price car, where the money you have as down payment is already 20% or more. And if you take an example, suppose a car is worth $100,000 using simple numbers, it means that you need to have $20,000 saved up already in down payment. You know you're going to put that down, and that's going to go to purchasing the car. You will borrow the rest, $80,000. That is one measure, and that is from the 24-10 approach. 20% is that.
Okay. So have at least 20% for down payment.
Yes,
and take a loan for no more than 4 years.
Right. So that's what the 4 is about now. So the 4 is the number of years that the loan will be for. So, usually cars, especially new cars, are given a useful lifespan of 5 years. We say when you buy a car, you will have a trouble-free number of years if you're servicing it properly and so on and taking care of it for 5 years. So if you're going to finance that by loan, however, one of the ways in which you save and which you ensure that you're buying an affordable car is to have with your lender, the bank, credit union, whoever, calculate for you for 4 years payment. Now, normally, if it's 4 years, you have to pay more per month than if it's 5 years or 6 years. So sometimes the bank or the lender might say, we'll help you out, let's stretch it to 5 years, 5.5, 6 years, don't take it. That means that you are not able to afford a loan that would help you to build up your wealth over time, to build up your savings over time. It is better to do this. Take it for 4 years, and if you can, then that means it's affordable. Now, here is where you save money in purchasing car using loans. In the 5th year, what you do is that you continue to pay the same money that you were paying for the car loan during the 4 years. But this time, instead of paying the bank, because you paid them off already in 4 years, now you go on to pay yourself. So that same money, you were not doing anything with it other than paying the bank in the last 4 years. So in this 5th year, do the same, continue to pay, but this time pay yourself. So you pay it into your savings account. And the beauty of this is that you are building your own ability to purchase with a higher down payment or even to purchase with cash at the end of the 5th year or in the 6th year. Because when you put that money aside, you have already been accustomed to living without it because you're paying the bank with it for 4 years. You now own your car outright. You continue to pay yourself. Put that into your savings account, and that contributes to what you are going to use for your car next period, or it contributes to your savings that you're going to be used for investment. So we say at least 4 years. You might be encouraged and enticed, unless it's a real necessity that you take the loan for 5 years. The best way to approach this is to use it for 4 years.
And I guess if you have well, your choice of vehicle is a little bit more expensive and you didn't realize until you did the 4-year plan, you could probably go back and look for another car.
Yes, exactly.
Yeah,
Correct, Sharon.
don't say, oh, well, I really wanted it. No, 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 no. Go back and look for something
Go back
else.
and look for something else. And this is where we talk about controlling your money. You don't allow your desire or your wish to have that particular car or what the car salesman said to you, all the beautiful words and things, So as we say, the fast talking salespeople. But you're convinced, you want that car, but now you realize that the amount of money you have to pay on the loan for having that car is going to take you, way above your budget or above your means, above your affordability. You look for another one, or you continue saving until you can pay a larger down payment. And Sharon, the final part of this 2410 is the important one for your overall budget. Should car payments be this percent or that percent of your total income? That's an important question. Now, car payments are a lot of money. It includes not just the gas, it includes the repairs, and generally you will
And
try
the
to do
servicing and all
the
of that.
servicing. You might try to do, yes, I meant servicing. You will try to do the servicing every quarter or so, right? It's recommended. And you have to pay for that too. And you have the license. Every year you pay your license, and you have your insurance. Every year you pay your license. Now, because you pay it once in a year, you just think of it when it's time to pay it. No, you actually have to be preparing to pay it. Out of every salary, just like it goes to pay in the bank, should come a portion for paying your insurance. Now, if your total of insurance payment, of licensing annually, and of loan payment, and of gasoline, and of servicing, if that total amount of money is too much for you on a monthly basis, it means that the car that you're buying is also not affordable. So, for example, if you are paying $900 in total car payments every month because $400 is on gas, and when you divide the insurance price because of the kind of car you have, it's coming up to $800 or $900. And that $900 is, let's say, 30% of your monthly income. That car was not affordable for you because 30% is very high. Remember, we say needs should be up to 50%. You try to have needs so that you have some more for saving and for a nice standard of living and so on. So the 10 in the 2410 for cars being affordable when you're using loans, the 10 is the estimated amount of your salary per month that should be going to car expenses. And that helps you to know whether you're affordable. 10 to 15 is usually the range that is given. Of course, if you're buying a car for your business, if you are doing a business and your vehicle is part of the business, then you have to work it out according to your business expenses and how much it's covering. But for personal budget and family budget, if your car expenses overall is getting to more than 15% of your monthly salary, perhaps it is unaffordable.
Okay. Ooh, cars are expensive. So with any loan, though, you have to pay back some sort of interest.
Yes.
So how do you get savings on that?
Right. So once you worked out with your lender, your bank or whoever that has given you the loan, because you can get a loan from the company selling cars, you can get a loan from a bank, you get a loan from a credit union, other lending agencies. But once you work out how much it is, it means that you are determining what you are going to pay for the car, because a lot of people don't pay attention to this. But when you're looking at your money and you're taking control of it, the fact that the car is worth $100,000, that is the start. You have paid a down payment of $20,000, you have borrowed $80,000, and then you have to pay interest on the $80,000. So the interest you're paying on the $80,000 is part of the cost of you paying for the loan. That's part of your personal cost. I mean, that's not the price the guy gave from the shop, but that's what you have to take care of. So how you can save on interest on the loan will be a way to determine if you can have savings on a vehicle loan. And so there are ways in which you could have savings. So most car loans have simple interest on it, which means that you pay on the balance. And then as you go and the balance is reduced, you pay less interest because the balance is less. So one of the ways of saving on vehicle loans is to pay faster than you were scheduled anytime you can afford to do so. So if, for example, the way the car loan works is that if the balance is $50 today, then for interest today, you are paying $50. You are paying interest on $50 today. If tomorrow the balance is $50, you pay interest on $50. If day after tomorrow you pay $5,000, that means your balance is $45,000. So interest is being charged on $45,000. So that is why, and interest on 45,000 is less than interest on 50,000, of course. So that is why, as a way of saving the amount of interest you pay overall on a car loan, you can have a goal, a personal target or objective that anytime you can afford it, you will pay more than the principal that the bank has scheduled with you to pay on your loan. So the faster you pay it is the less amount of interest you will pay overall, and that will be a savings for you because the price that you're paying to have this car over the 4-year period is less as you go forward.
Which actually takes me back to what I said earlier. If you're choosing a car, I guess you have to take all of that into consideration as well if you want to pay it off even before the time, because 4 years is really long. Really long. Well, you know, you have to do it. You know, you get invested and you're like, this is what I want. So you're like, I will eat the 4 years
Yes,
because I
it's
need it. But again, if you want to make payments more than what they ask for, then you also have to take that into consideration when you're choosing the vehicle that you want to buy.
Yes, you do, and it's often at the time of buying the vehicle, you're so excited about the vehicle itself, you tend to overlook some of these. The fact that you're going to be having this thing for 4 years, pulling and sucking on your salary for repayment, not only of the amount you borrowed, but of the price of the amount you borrowed, the cost, the interest. And so you have to remember that when you are calculating and when you are sitting down. So your attitude towards money includes your attitude towards the business and the transaction that you enter into, speaking about how you would use your money in the future.
Okay, so what can you do to pay less interest and save money?
Right. So using the base approach of trying to get the balance down faster, there are three things that I could think of now. So thing number one is that you can use something called payment splitting. And this means that if you have already worked out, you will pay every month $800 on the vehicle, $800 on the vehicle loan, and you pay it once a month. This payment splitting is an approach where you can actually arrange to pay instead of on the 24th of each month only, you will pay on the 9th and on the 24th. What that does is that the period between the 9th and the 24th, you have paid a portion of the principal. So the interest is reduced for the next 15 days until the new payment date on the 24th. This is sometimes, people find it very complicated when we explain it, but it's not to complicate the life. It is really just once you ask for it, you might find that the bank or the lender might say, yeah, that's possible. And this is especially good for persons who have either variable cash flows, you get income at different times, and it's also good for persons who have not just monthly income, but twice a month you get paid. So that is a good approach. Also, it's good for people who get paid once a month, but you have certain things that happen, and sometimes they don't happen. So whenever they don't happen, you have the opportunity to pay earlier. Every time you pay earlier, you reduce the balance. And to reduce the balance for 15 days, trust me, is a big savings. Huh? So you might find it end up being just maybe $80 that you save just by not paying interest for 15 days. And that, I think, is a savings, especially for persons who want to control every single dollar of your money. So that's one thing you can actually do. The payment could also be made, instead of just simple like that, fortnightly. Now, when you work out the maths, if I'm paying every 2 weeks in a year, instead of making 12 twos, 24 payments, I end up making 13 instead of making that, I make 26 payments instead of 24, because I'll make 13 half payments, 13 fortnightly payments, and that's how it works. So that's how the year works. So that's another benefit if you get paid fortnightly, that you can actually save by paying your car loan fortnightly instead of single monthly, as is the customary way of setting it up. I'll tell you the experience that having spoken about this once in a training program, and there was a bank worker there who said, but and sent a message to me afterwards, sometime after, that was one tip that she really benefited from, because they get paid they get money into their account split twice per month. But she had never done so even with her loan, and she's a bank worker. So awareness, this is what this program is about, bringing financial awareness so that we can know the things that we can use in order to save money and in order to control how we pay for it.
Okay, well, and what's the next tip?
Right. So another thing we can do to save money is especially where you have everything set up, but things change as you go down. The first year, the second year, you might have a pay increase, and you might be able to afford a higher payment than you were able to afford at the time you contracted the loan and bought the car 2 years or 1.5 years ago. And that is called rounding up. So what this is that if your payment is like, say, $328 a month, right? Or you're obligated to pay based on the schedule with the credit union or the bank or so. What you can do is once you can then manage it, you round that off to $350. Shawan, you'd be amazed what paying
The little extra.
will do for savings for you. It reduces the balance, just like we explained, faster, and even though it's a small amount, but it brings you to imagine you repaying your car loan in 3.5 years instead of 4 years as was contracted, simply because you are making additional payments. And not a large one, a small one. Your payment is $640, you round it up, $675, $700, because you can afford it from this year on. And you do that for the next 2 years or the 2 remaining years. How rarely that brings you faster to finish paying that loan. It means that you are in a better position than you planned to be and had agreed with the bank. So that's another way in which you could actually save on vehicle loans.
Okay, so we have payment splitting, we have rounding up, and
yes.
no, the third, because you said it was 3, right?
Yes, I volunteered 3 things.
Yes,
So,
you did. I'm going to hold you to the 3.
yeah, you can try to do in this third one, making additional payments whenever you can, and this can be lump sum payments. Now, sometimes you hear like bonus payments, bonus salaries, double sometimes,
For the people who get double,
for the
yes.
people who get
Not me, go ahead.
such people who have such, you have bonuses, you might have merit payments as well. Performance appraisal was very good for a year, or you have a good result from the company this year, and there is some sharing by management.
Or maybe you did a little something on the side.
Or maybe you did a little something on
and
the
you
side.
got some money.
Yes, side hustle. It brings you some money, Or there's a music festival, and you put on a tray somewhere, and you sold some things, and you have a net profit from what you did. These things like that. Or you good on doing some, sewing or hair braiding, and you got some extra money. The thing is, you can do additional payments, and this could be lump sum payment. It doesn't bound it, so you're not obligated, so the bank is not expecting it. But once you come and you can make it, you offer it, you show it. Now, the key thing is to make sure that payment is not for things that you made bank up and you had arrears. We are not encouraging arrears here. We're saying that this is for, and so make sure it's dedicated to the principal. Don't let them receive it and hold it there to apply as you go forward so you go have a future balance. No. State immediately, and I would say exactly that. That is what I wanted to be. I'm giving you $300. This is to pay down the principal amount on the balance for my car loan, and I want it paid today. Can you do that? They do. Now, most times they might say, no, we have a rule where we only doing it on the payment date, so you have to wait until the 24th. In any event, it's still better it's done than it's not done. And so that's another way. That's another thing you can do to make additional payments whenever you can afford it.
And actually, all of them sound really doable to me. Do all the banks allow early payment options, though?
Right. So my best answer would be, I said I don't know exactly what all on each bank would do, but my best answer would be to have that discussion with your loan officer or your customer service representative. That's extremely important in any event, whether you can do or not, or whether you want to or not, because one of the best ways to keep control of your money and to be aware of what is happening with your money all the time is to have a conversation and to be in constant contact with your bank, with your credit union, and so on, your loans officer. So I would say have a discussion and make sure that it is done. Many persons would say that no, they don't do that, but if you are not aware of it, you wouldn't ask.
True.
But ask the question, because many banks would like to do that. Well, if you can afford to pay, they would. Remember, in banks' mind and in credit union, it's business. And the better you are at servicing your debt is the better customer you are for the bank. And, they would like to hear that. So I would say check with your own lender. But generally speaking, the lender will not be averse to early payments, because early payments also it's a sign of your increased credit worthiness, as I would put it. Yes.
Okay. Any other tips that you can share? I know you only had 3 on the top of your head, but I'm sure you could find a couple more.
Right. So there are things like refinancing. Now, if you are stretched, and this one would not be for saving on the plus side, it would be saving on the longer term side. If you are stretched with cash flows and things are getting tight and a little too difficult, one of the things you can do is to try to refinance, the car loan. Now, most times when we say refinance, we think that is because you're in trouble and, you need to reorganize and so on. But it could also be because you want to achieve another objective faster. So it might be that you realize that, there's an opportunity for a land purchase. You don't want to miss out on the land purchase, and you do have to take a loan for it. So one of the things you can actually do is to refinance the car loan, perhaps to bundle it with the new loan that you're going to take, because you now have land security. And that is something you, again, have to negotiate. But first of all, you need to know in your own assessment of your financial situation and position that reorganizing that loan is positive for you and not negative. In other words, you don't want to go back on the 2410 and now you're stretching it to 5 or 6 years because you're refinancing. So the car is always something that from the get-go we know, as long as you have it on the road, its value is going down. So you don't want to be adding loan that really is not in relation to the value of the vehicle. So that's something that you want to pay attention to. So refinancing, but reorganizing your financing is a better way to put it. On a car loan, in relation to other goals, other financial goals that you have, I think is one of the ways that you can. So whatever you save there, going to use for a different loan, a different goal or objective, and ensure that even if you're not using it, then it's actually going towards your savings.
That's another good tip.
Mm-hmm.
Oh, look at that. We are almost out of time. Just a few seconds left.
Yes.
Any final words that you'd like to share?
Right. Now, these times that we're in here, it's times when we hear that the interest rates are lower and are falling. Now, this is on the deposit side, of course, and on the investment side, rates are falling. But in these crucial times also, it's possible to get lower rates for car loans. Now, one of the things you have to do is to ask. Listen around and look around and see what the rates are on new loans, because the banks and they advertise what the new rates are. And if your rate is higher than the current market rate, the current lending rate, one good thing you can do is to ask. Now, you would say they wouldn't give me because it's, you might think that. Don't think negatively where your money is concerned. Think positively all the time and ask. Because one thing a lender would not want is that you take that loan and have it financed by some other company at a lower rate because it's feasible for you. And these days, because of the businesses now kind of scarce and low, one company
can't afford to lose you.
They can't afford to lose you. You ask, and more than likely, you might get a good response that lowers your rate. If your rate is lower, it means that the amount of interest you pay in is lower. And the amount of interest paying lower means that it is even more affordable for you. The big thing here in the tip, as usual, is that whatever you save from any of these activities, any of these initiatives, make sure you put it not to fast food and dinner and parties. Make sure you put it to your savings. Get your emergency savings up. And once that is up, then you begin to look at your investment to grow your financial wellness.
So in other words, be more focused. Don't party and eat some. Enjoy yourself a little, but don't get too overboard with it.
Yes, and keep your eyes on that financial price, because in vehicle loans, as anything else, you are paying interest, and it is a rate. The rate can be high, the rate can be low. The rate is happening in the market. If you see it's possible to get it lowered, check it out. Ask a question. Take a half day. Pay attention to your business, and let's get those savings up.
All right, Mr. Francis. Yes, let's get our savings up. Thank you again. Another great program. You can always check us here at Win FM on Wednesday mornings at 10:15. You can also check out our social media pages. We are on Facebook, Win Media SKN. You can also check our YouTube page, Win Media SKN, if you want to go back and look at those earlier episodes for yourself and gain some gems of wisdom from our financial consultant.
Show us in a question, show us in a comment,
Yeah.
and we can address them as well in the upcoming programs.
All right. Thank you so much, Mr. Francis. We'll see you again next Wednesday.
Thank you very much. Looking forward.
All right. Bye.
Okay.